why would utilities be pushing lower when the general stock market is moving higher? So for example, on this chart we're looking at utilities, and so utilities are this sort of special sector within the various sectors of the stock market. The utilities are more dependent on the interest rates. So utilities usually borrow large amounts of money, and the lower the interest rates, the more profitable and the easier it is for utilities to operate. So right now what we're seeing is, from record highs that were set in October, we basically continued lower. But notice that for S&P 500, the highs were also set in October. We pulled back, but now we're back, towards the records again. So this is the divergence that I'm looking at right now. Notice these utilities are going lower, and the S&P 500 is clearly pushing higher. So why would utilities be pushing lower when the general stock market is moving higher? So this is one of those things that we need to be kind of paying attention to, because I have heard other professional traders talk about utilities sort of as a bellwether of the market. And so if utilities are suddenly like dropping, we should be paying attention. And so I was looking at some of the bond market. So this is long dated treasury bond. This is 20+ year treasury bond ETF. So right now all of a sudden we see treasury bonds dropping together with utilities, but at the same time, as bonds drop, the bond yield rises. So if we get above 4.83, this would imply that treasury bond yield is actually in an uptrend. Okay, and it's not really a good sign, because what I understand is everybody wants lower interest rates, obviously. So perhaps that's what utilities are feeling. They're already kind of dropping in anticipation of higher interest rates. Higher interest rates are also not great for the stock market, and there is no strong correlation between performance of stock market and interest rates, but lower interest rates generally is better for stocks.